right? Yeah. No, I think we're all looking forward to post-lockdown lives. Okay, perfect. And now to pivot on to M&A. So HEXO's been pretty active. Cannabis, and now more recently 48 North. So I guess I'll leave it to you to how you want to take it, but really I'm looking to kind of address two parts, which is one, the rationale for cannabis and for 48 North, if you can help the listeners understand that. And then the second part is the M&A perspective or strategy in general for HEXO.
Sure. I'll go on that. So look, yeah, M&A, we know we've been growing organically with pace versus versus the industry, versus other LPs. But that being said, I think the combination that is now Tilray, to their credit, has initiated quite a gap between themselves and others in the space. And while we are growing organically, like I said, at a very high pace, it's going to be difficult to make up that gap. And I think everyone's looking at how do you get into a top 3, top 2, maybe number 1 against that combination. And so M&A is going to be important, but you have to do it smartly. So you look at Zenabis, and you're asking about Zenabis and 48 North. The beauty of Zenabis is that, one, they bring a whole set of benefits to us in terms of cultivation with their Atholville location, which is an indoor site, state-of-the-art, great site in Atholville, New Brunswick, definitely the diamond of that prize. And so we really anticipate that we're going to be able to use that site, get high quality app growth. And it's going to propel us into some other segments where we think that we're going to be able to compete very strongly. And they're low capital base, right? They don't have high depreciable capital in the billions or multi-billion dollars. They're $125 million of depreciable capital base, which is really complementary to us because we're under $300 million. And so there's a great combination there. And then 48 North is the same thing. We're getting them for what we feel is a very reasonable multiple of sales, similar to what we did with Zenabis. Very accretive for our shareholders, bringing in different products and that be accretive that allow us to propel ourselves to other categories that can really round out our portfolio. And so I think there's something to be said for both. And together, the three of us are, now a solid number 3 in market in a very important segment between Canada adult use recreation, which is, we believe, the most important segment, as medical is not growing. Adult use is growing. We believe inevitably it's going to be the avenue of growth both in the United States and globally as the regulations change out of Bitcoin to legalize. So I think they've done both for us, and I think it's a great combination.
Got it. Okay, that's helpful. And I guess sticking on this for just a little bit longer is, so should investors expect that HEXO will remain, relatively speaking, active in the Canadian market from an M&A perspective? And what is kind of that checklist when you look at an asset or a business in Canada? Because there are many, and they're not all the same quality. So what is it that you look for before it kind of checks all the points?
Go ahead, Seb. Go ahead.
Well, without revealing our entire M&A checklist, Tammy, but as a general rule, you can get some pretty good clues from Zenabis and 48. So overall, we believe, and I've said for years now, that HEXO wants to be top 2 player in the Canadian rec space, and that would involve a 20% rec share. We believe that that's important because distribution will build the value of brands. Brands will become the final moat on which we compete. It started off being licensing. Today it's capital, and it is moving to brands. And it's very critical to establish that critical mass of market share. So market share is important. Sales are important. As part of that, we look at accretion ratios. So we make sure that we're buying for multiples that are interesting or lower than our trading multiples, so that there's immediate accretion. We look to low cost and strong assets. So for the very first piece, they have to be able to make quality products, and they have to have assets that produce at some of the lowest costs in the country. That has been one of the secrets of HEXO's success. We believe we have the lowest cost per gram and one of the lowest manufacturing cost bases in the whole industry, and we need to continue that. And perhaps more importantly, if we find unique technologies, now these are few and far between, but in the case of 48 North, it was great to get into a whole new line of products, which are cosmetics and wellness creams that we do not have at HEXO. So when we tie that into our future strategy, powered by HEXO in the United States, in Europe, and abroad, our goal is to partner, and we'll talk a bit more about this, I'm sure. Our goal is to partner with world-class companies in specific categories. Being able to come to those companies with an existing product line that's award-winning, that consumers are responding to. So I'm thinking about 48 North's Apothecana creams that work wonderfully for arthritis, pain, and anti-aging properties, etc. Bringing that to future CPG partners as proof of concept is a great way to approach the cosmetics spoke.
Got it. Okay, that's helpful. And yes, we're definitely going to touch more on the Powered by HEXO strategy. Before we get there, though, I do want to ask this point is because HEXO is a low-cost producer. You know, one of the new or more recent launches that you've had in Canada is the Bake Sale lineup, which is pretty compelling price point. I think more compelling than the original Stash lineup that you had. Some peers have sort of called this the emergence of an even new discount segment, further more compelling than the value category that was already there. So if you could talk a bit about the rationale or the strategy behind launching a lineup like Bake Sale in the Canadian market, and where does this fit in with your overall mix? Because you've also been sort of doing that relaunch of Up, which is meant to be more that mass premium brand.
Well, I think those peers are perhaps starting to understand about half the strategy after 18 months, Tammy, but let me try to say it again. So when we launched Original Stash 2 years ago, we were highly criticized. We were accused of dropping the floor. You'll never make money. You can't sell your product. There was all sorts of criticism there. The reality is we defined the market. What we did is we identified that the black market consumers, which 2 years ago were 80% of the total demand, were paying a specific price point, and that price point was between $80 an ounce to $145 an ounce. This, mind you, is while the legal market was selling marijuana at $400 an ounce. So really not providing value to consumers. So we said, okay, let's put an end to that, and let's go challenge black market directly with a premium product, being Original Stash, but priced at black market prices. And we did that, and everyone said, well, that's not sustainable. And from their perspective, it wasn't. They can't grow high-quality marijuana at a low cost. So from their perspective, they're going, that's an unsustainable business model. You'll never make money, and we can't compete at that price. From HEXO's perspective, we're making fine margin. You've seen it in our Q2. We're still in the healthy mid-30s margin. And we keep improving our COGS. So we were not at the bottom of where we can take our COGS. So I'm sitting here strategically going, okay, wait, I can make this. Everyone's complaining when I drop price. I can maintain healthy margins. I'm just going to keep dropping price. And so we then responded to black market with Bake Sale, again, in a twofold fashion. So now we've gone after that $80 price point, which is the bottom of black market. At that point, we're really hurting. I mean, we hurt black market when we went in with Original Stash. This is the death knell for black market flower with Bake Sale. And we're also creating, helping consumers really address that cooking with cannabis category. And we're introducing how can you buy bulk cannabis that's still very good cannabis, but is discount, so it's a bit smaller bud structure. It's not focused on terpene-rich experiences, but it's perfect for your cook-at-home utilization. And again, replacing what would be that $80 ounce in the black market. Now, by the way, that $80 ounce in the black market is really, well, how I know that's bottom barrel. The quality of that $80 ounce is really terrible. We're talking all shred product. It's not whole bud. With Bake Sale and our cost base and our manufacturing process at HEXO, we're able to offer whole bud, very good product We're able to go head to head with that black market price, and we're still making margin. So that's really at the base. It's leveraging our ability to produce, at cost.
And you know what? I'm gonna spread on that one more thing, okay? And this is the dirty secret of the of the cannabis industry in Canada, you know, is inventory issues. Inventory. You know, I mean, how many LPs have had write-downs and provisions associated with their inventory, whether it's underutilization of capacity? How many times have you heard that? Or, you know, slow-moving product, or whatever it might be. And, you know, right now there's a consumer trend towards high THC content, which presents a problem if you're running 14 to 17% THC on certain strains or certain cultivars. And so it's an issue. It's an issue. How do you utilize that? This solves that issue. You know, we have a quality product. To everything said, it's a quality product, but it's between 14 and 17% THC. This gives us a creative avenue to de-risk inventory on the balance sheet. You do not have to take provisions for slow-moving inventory, right? Where it's an accretive move. And that's over and above things we've already done with inventory around utilizing entire trim included, and we're a net utilizer of trim. We use more than we produce in things like hash and pre-roll and distillate and other things. So we that's part of the reason we're such a low cost producer, and we haven't taken a provision or write down on inventory since year end when we picked it up. So we're now into our third quarter.
Right, got it. And that's very interesting when you talk about the inventory management aspect as well. Before I move on to the Powered by HEXO and US and all of that, because I definitely want to touch on that. One last thing when it comes to the brand portfolio in Canada is specifically on Up and playing more also, because you've got a good kind of positioning now based on what you've done with Original Stash and now Bake Sale. As you think about higher up on the price architecture, where there's more high THC, that sort of stuff under the Up brand, should investors think about, you know, the ramp up there is really going to come in as you integrate Zenabis and you've got that larger indoor facility, or should they think about it a different way when it comes to the ramp of that brand and those products?
Well, if you look at some of the Up SKUs, Tammy, it's already been very successful. I mean, we've got really good velocity on our Northern Berry SKU. So consumers are responding well to Up's 20% plus guarantee. And that was the first brand promise where we came out to the industry, and it was we said, you're never going to open up a bag under 20. There was an issue in the industry where people were getting promises and people were saying, hey, here's the label on the bag, but by the time you picked it up off the shelf, it was always underwhelming. So we decided to solve that at HEXO and say everything that goes into Up will be always guaranteed at 20%. And we have lots coming down off the line right now at 24% out of our Messon greenhouse. So there's an old school fallacy in cannabis production where we believe that indoor is your absolute only way to grow quality product. That's incorrect. We have phenomenal grow teams. We're able to grow quality product out of Messon in our state-of-the-art greenhouse. Now, what the Alphaville and Zenabis facility allows to do is actually go to multi-strain, smaller rooms, super high quality. So we're entering a phase right now with internally we're calling the 100 strain strategy. So we want to now respond by not only having some of the best cost leading products out there to market, but we want to have the best availability of products to market. So being able to go to consumers and really say, whatever strain is your preference, whatever combination you're looking for, we have that at HEXO for you at a phenomenal price and a top tier quality. So we're looking forward to onlining Alphaville as part of that strategy, and that should roll out probably by end of calendar year in market.
Okay, got it. Interesting on the multi-strain part, because that is something that we do here, which is consumers constantly want to see new strains, variety, diversity, etc. Got it.
Absolutely.
Okay.
It's price, concentration, freshness, where HEXO excels. So we're currently with 30 days is essentially farm to table, if you want to say, which is industry leading. And so we're very pleased with that. And you can see in customer reviews that since we've implemented our freshness strategy, they've gotten a lot better. And after that, of course, is newness in the industry. People are always looking for newness, and of course, with our provincial suppliers, critical to stay always on the shelf, which HEXO has phenomenal relationships there, and we've been filling that well. So if you can hit those 5 things, I think from a flower perspective, you're pretty well covered. If you can grow at cost, of course. So that's the complexity of this industry. But thankfully, we've been at it long enough now that we seem to have a pretty good handle on it.
Great, sounds good. Okay, so let's pivot to the Powered by HEXO strategy. So can you talk a bit about what HEXO brings that would kind of appeal to big CPG or just other big entities that are looking at cannabis? You've got the beverage spokes there. What are some of the other spokes that you're working on, you're thinking about?
So there's a couple other spokes, and what's been really cool in the last year is that I used to have to talk to CPGs about our technology. I used to have to talk to CPGs about our execution. What's now is it's not aspirational anymore. What I have now, and what's been phenomenal with my conversations as of late, is I'm coming to CPGs, I'm going, okay, well, look at the track record, team. HEXO has gone up head-to-head against one of the best beverage companies in the world. We went up head-to-head against Constellation Brands. They made a lot of noise about being #1 in the Canadian market. They were in market for 6 months ahead of us, so they had the first mover advantage. And we, in the first 3 months in market, took the #1 spot. And we continue to increase share month over month. So the consumers are saying Powered by HEXO is the way to win. So we're currently at about a 44 share for beverage in Canada, and we keep increasing. So just stellar success. Most of the top 6 SKUs are now trust products, and that's consumers voting around that, the function of the product, but the taste and how the execution in market is that whole package. So all that rests on fundamentally 3 pillars of technology. The first one is your operational expertise. So can you do it at cost? Can you do it at high quality? And what's the extraction technology that you're using? And HEXO, of course, has made quite substantial investments in our Belleville Center of Excellence. There'll be more to come on that in the following year as we continue to develop our Keystone isolation technologies, which is part of that extract group. The second pillar of our technology is really about need states. So how do we create bespoke experiences for consumers? So for example, if you were to consume a Veryvel beverage, which is our lifestyle-focused beverage brand, it's a very different experience than if you have an XMG beverage, which is targeted usually to younger adults, usually in the gamer crowd, is more akin to an energy drink. And so we've created these bespoke cannabinoid-based experiences that have a very different effect when you take the beverage, although very consistent from occasion to occasion, right? When you take the same beverage, you always get the same thing. So consistency was key. The third part for CPGs was which platform that we use to get that experience into the product. And so the platform for beverage happens to be nano-emulsion. And the consumers seem to be saying that HEXO's nano-emulsion technology is the best tasting. They love the onset, like it's voted on. We can see it in market. And we've said that for a long time, but now it's validated through sales. But when you get to other spokes, and the next ones, you ask the question, who's next? So functional foods is where we're going next. We're in advanced discussions. And for functional foods, what becomes important is coatings, proper dispersion. These are technologies we've been working on for years. And that's really that third technology bucket. When you get to the next pieces, which will include things like pet care, which when you include cosmetics, right, you have other technologies, right? If you think about sublingual applications, we use thermogels, for example. So by having those 3 technology pillars working well together, we're able to deliver to these CPGs things that they have not been able to do on their own. And I think a good example was in Colorado when we've launched the Trust Beverage portfolio, and we went mass channel in groceries, CBD from hemp. We displaced almost every major brand out of grocery store end caps with that product. And some of those major brands, by the way, were large CPGs that tried to do it on their own. So now the conversations with CPGs are very much, okay, we've seen CPGs fail at this. We've seen world-class beverage companies go head-to-head with HEXO and fail. And HEXO is clearly #1 and able to deliver this as part of this partnership framework. And the reason we're able to do that is very much because of the construct. We are leaning on world-class companies and we're making them better at what they do. we never would have made the best beverage brand in the world on our own. Molson has been a phenomenal partner. They've brought some of the best flavor technologies, the understanding of the consumer, the understanding around occasions, where we've been able to make everything from a beer to a de-alc wine to a health-focused beverage to a flavor-forward house of terpenes, right? So all sorts of really interesting varieties of flavors that work in market. That's the winning formula, I believe, and the formula that we look to reproduce. So next in functional food, and of course, pet care and cosmetics should be not too far behind those.
Got it. Okay. Very interesting. The level of science that's there is so really what I'm getting is what HEXO brings is that tremendous amount of understanding of how to work with cannabinoids essentially in these different products.
From an operational perspective, from a pharmacokinetic perspective in body for the experience, and also from an actual technical application, right? So yes, and if you look, you can actually see, investors can actually validate this another way as well. If you take a look at our filed patents, you'll notice HEXO is the second largest patent portfolio now in Canadian cannabis, which is another piece that I believe will tie in. I talked about brand being the final barrier. Well, the first part of brand and the most important thing is distribution. If people can't buy your product, you're never going to build brand. So you've got to have distribution. But the second piece is that product feature set and is intellectual property. And HEXO has built a really robust portfolio, and we continue to develop some of the best cannabis technology in the world. And that's at the heart of what CPGs are getting when they partner with HEXO.
Yeah.
Got it. Got it. Okay. Great. Let's stay on Colorado for a second there, because you've announced the new facility as well. So can you talk a bit about that? Is that is it specifically for to continue to expand Trust, which is the JV with Molson Coors on the beverage side? Is it for other things as well?
Yeah, it's absolutely for other things. So there's two ways we're approaching the U.S. market. The CPG powered by HEXO approach is the first, where we're going mass channel. So not necessarily going to MSOs, although we're looking forward to developing our relationships with MSOs. We think they've done a phenomenal job of building out a world-class cannabis retail network, and we think a lot of those companies will be hugely successful, and we're looking forward to support them. But HEXO's a products company. So we need to make our products somewhere, and Colorado is a perfect place. It's a launching point that gives us access to multiple different states legally today. And we've put our beverages in market now, and those need to be supported as they're expanding. So we're in constant discussion with Molson Coors about the timing, about our geographic expansion. But then the second piece of expanding that is about adding partners. What we're also considering is bringing some of HEXO's technologies in core cannabis to the U.S. and actually going to the multi-state operators with a value proposition that would look something like, let's take one of your product categories, like pre-roll, for example, and let's lower your COGS base where you can make better margin, have a higher quality product, and we can do a powered by HEXO private label brand, for example. So that will be the next leg of what this facility is about. That requires more regulatory evolution. So that's not a today strategy, but it's a very rapid evolution. So this is where we're in the setup of it. So we're right in the early innings. And we want to lever all the success we've had in Canada. And I think that's been because we've been forced to focus on efficiency rather than large market expansion. And so that has come with a couple nuggets of technology that we can then leverage from our facility in Colorado with the team that's being set up there.
Oh, okay. Oh, that's very interesting on the private label side. Okay. Another thing that I investors think about is you've got a JV structure with Molson Coors. When you have these discussions with the other spokes, can you talk a bit about the types of structures and arrangements in terms that you think about it, and which ones you're leaning more towards, and you're trying to go that route, whether it's JV or maybe it's another type of agreement or structure that you prefer?
Yeah, I can take that one. Just to be clear, the JV was great, and it remains great when it comes to Molson Coors. I think Trust Beverage is going to be a tremendously successful organization in our mind, and we're going to be a big part of that. In future, though, some of these other partnerships, to your point, are more like a commercial partnership agreement. How we envision it in Canada, because we have the licensed production, we're the licensed producer. we would own the means of production. So we would we would borrow their IP, they would provide expertise, their brands, packaging, things of that nature. We set up the infrastructure in Belleville, and then we produce. So if it's food product, we produce food product under brands of these major CPG. Everything is owned by us. It's consolidated into our P&L now and forever, and they get a royalty for the use of their brands, their expertise, their IP. In the United States and globally, the United States for now, it's their distribution, their manufacturing, their capital, and so they're developing all of the content. They're the ones that are manufacturing the product and distributing it. We provide the powered by HEXO technology that goes into each of these products, and it's the powered by HEXO. So we have all of the sales that come from the powered by HEXO technology itself. So think of Intel inside. They don't own the sale for the whole laptop, but they certainly are doing well in sales regardless, because we're in so many laptops. And so that's the same idea that we have. We're getting the input revenue, which is highly margin centric and a great source of high volume sale. And then we take a royalty back for the powered by HEXO off of their products, which again is very accretive because there's no COG associated with royalty. So we like how it's setting up, and we think it's a great way to be accretive per share.
Got it. Okay, great. That's helpful. Okay, and now I want to pivot back to the comment as you think about the U.S. With MSOs and just how you think about the path or the strategy forward for HEXO. So you talked about that potential private label opportunity aspect, which I think is very interesting. How about though, some of the MSOs are also thinking of, becoming product manufacturers. And when you think about, the U.S., from HEXO's perspective, in addition to thinking about on the CBD side with trust, other legal ways you can do it right now, but if we think about on the THC side, aside from this potential private label opportunity, how do you think about other avenues? Is this something where you're looking to, some sort of optionality to try to get in sooner rather than later? Just how do you think about timing or to be able to build bigger presence in the U.S.?
The specific regulatory structure, there's a few ways to cut it, and so we'll announce the specific regulatory structure we're taking when we're closer to that date, Tamy. But essentially, one thing we're committed to is remaining legal at all levels of government, and you can see that in our acquisition as well in Colorado. So we already have THC zoning. So we're already cleared there. So we're thinking about that already, and that's a hard thing to get, by the way. So that's the sort of way we're starting to think. Now, obviously, that does not clear us at a federal level to deal in THC, and that is not our intention. We will get cleared before we operate, but there's a number of regulatory structures that we can pursue there. What I think from the comment of MSOs getting into the product game, I think you'll see specialization in industry. And I think that the MSOs that have done a wonderful job in building out their retail networks, they still have a lot of work to do in building out those retail networks. And I'm sure some of them may be successful in developing products. HEXO has been a products company now for 8 years running. We've proven in Canada that we have built some of the best COGS, some of the best quality, and at high throughput. And we've built on a scale that so far I haven't seen in the U.S. So there's a lot of risk to an MSO saying, and a lot of capital, quite frankly. It's very capital heavy to go and build all that infrastructure and scale. So I think it's specific product categories by focusing and by taking product categories which we've won. So I take hash, for example. We're the number one hash provider in Canada, and our hash is getting great reviews. The quality is good, the throughput's good, the margin's great. So just to take that technology and to bring it to the U.S. with a partner, and where I can tell, where we can have the discussion with the MSOs, and of course they'll always have the option to invest themselves. But I believe once they see our COGS and the margin opportunity, it becomes a bit of a no-brainer. In fact, that's HEXO's job. Our job is to make it a no-brainer for them to say, we don't want to be in the manufacturing business, right? So it's think of Foxconn, Apple, right? If we can be the Foxconn to their Apple, we'd be very happy with that relationship. If we make them more profitable and allow them to focus on their core competency of building out the retail network, getting more share of voice, while we just keep lowering price and delivering higher quality with a depth of portfolio.
And look, Tamy, if they do get into products, become focused on that area a little bit more than they are today, they still at the heart are fully integrated, meaning they still are going to have to focus on retail, right? As we all know. And in a retail environment, you're going to have to fill out that portfolio. You have to, for the consumer to want to walk into that store, there has to be a volume of variety, right? You have to have a breadth and depth to your inventory. And so that being said, you're not going to want to, at one, great MSO is not going to want to carry the product of another MSO competitor in their stores. It's like a private label in grocery. You don't see, or Walmart, you don't see that in Target stores, and vice versa. And so that being said, HEXO, we want to be a friend to all the other MSOs. We want to provide high volume, highly recognized product with great TPP partners, with brands that people recognize, and sell it across all stores, like you would with any kind of Unilever brand product that you'd find in any department store, any drug store, or any grocery. We can play across MSOs by coming to them with high volume, recognizable, good margin products that are going to move because it's accretive to them. And so that's what our strategy is going to be.
Got it. Perfect. I'm going to squeeze in one more, actually. I know we're running a bit low on time, but just on beverages in Canada. Do you think we're going to see regulatory change hopefully soon in terms of how many you can purchase, anything to expand the category more?
Yeah, so the good news is we're at about 1.8% of category right now, so we're already about double. So the skeptics of the past said, hey, beverage would never get above 1%. So we're already close to double that. And in specific stores, we've actually seen unit sales hit 6% of category. So it is working. But the biggest barrier to that is the case quantity. You can only buy 6 beverages, sometimes 5, per store trip. And that's not the typical occasion, right? People are used to buying a case of 24. So that regulatory change is expected. The government is aware of it. The government actually agrees with us. We've had those conversations, so they now completely agree with the industry position. It's unfortunately not a priority, and I completely understand they need to save lives with their focus on COVID. But when they come to that agenda item, I think it will change. So I probably 18 months out at this point, Tamy, and within that band. And I think that could significantly expand the category. And what's really cool about our repeat rate is people that try Trust Beverages tend to rebuy at about an 85% rate, which is absolutely phenomenal. So our biggest challenge right now is inducing trial. As people try the product, they become believers.
Oh, good. Great. Okay, perfect. I think this is a great place to leave it here. So, Sebastien, Trent, I want to thank you guys for joining us today and walking through the HEXO story with both me and the listeners. So thank you.
Thank you, Tammy, for having us.
Thank you very much.